kick things off. Yeah.
Oh, just a housekeeping note. It's wonderful to see so many faces. Mitchell, will everybody be able to see the entire panel, or just thinking maybe joiners could turn their cameras off just so we can really focus in on the panelists, the presenters today. Thank you for showing your beautiful faces. That would just be my recommendation. And when we get to Q&A, of course, we'd love to see more of you.
And just on that, if everybody who's not a speaker could mute as well, that would be great. Fantastic. Well, thank you everybody for joining this morning's webinar hosted by ASTRA and our new member, Wheelhouse. It's really great to have them on board. I first met Oliver in April in London. It was freezing cold, and I sat there and said, you need to be part of ASTRA. We need Wheelhouse as part of our family. And it's great that you are part of our family, and they also will be making an appearance at our Here to Stay conference in October, which is fantastic as well. So if you haven't got your tickets to the conference, make sure you head to heretostayconference.com or our MyAstra website to find out more information. For those who don't know me or who haven't met me, I'm Mitchell Price. I'm the Chief Executive Officer of ASTRA, the peak body for short-term rentals in Australia and New Zealand. We have an amazing session this morning with our team, and I'll let them introduce themselves in a moment. I do want to make acknowledgement of those board members on ASTRA who are on the call, and of course, our chairman, Yoav Tyrrell, who is also here as well. Without further ado, I'm going to hand to Oliver from the Wheelhouse team to kick things off. Thanks, everybody.
Thank you, Mitchell. Yeah, we even sat outside having coffee in the cold London spring. It's great to meet you all. I'm Oliver with Wheelhouse. I'm the Director of Sales for ANZ and Europe. And you'll be seeing me in Brisbane in the fall at the Here to Stay conference. Not sure if you've heard about Wheelhouse before. We are a revenue management software. So think dynamic pricing, market data, and we have a few different products, but this isn't going to be a very sales heavy call. This is really about the subject matter of revenue management. We do monthly calls in North America with revenue managers, and we intend to do quarterly ones here with you. So just know that if you are a professional revenue manager of a larger portfolio, we will be happy to hear from you and welcome you into a future meeting. With that, I'm going to kick it over to John DeRoulet, who heads our onboarding and revenue management at Wheelhouse, to introduce himself, and from there, the panelists. And thank you so much for joining.
How's it going, everyone? Pleasure to meet you all. Looking forward to having a conversation this morning with you. My name is John DeRoulet. I'm the head of onboarding at Wheelhouse. I've been a revenue manager for a long time, over 10 years now. Most of my experience with a large North American company called Stay Alfred that ran about 3,000 apartments across 33 US cities. And now I get the opportunity to work with revenue managers and property managers all over the world, helping them both learn Wheelhouse, but also just honestly talk revenue management strategy and talk about how to make more money. So really excited. I'll be moderating this conversation today with you, and we have some great panelists. Why don't you guys introduce yourself? Vincent, do you want to start?
Sure, of course. So my name is Vincent Andrade. I'm the Chief of Staff and Head of Revenue Management at Made Comfy. So essentially, I'm Chief of Staff to the CEO, so I work with him on our sales strategy, our growth strategy as a business, alongside heading our revenue management team. And we manage currently about 1,500 properties in Australia and New Zealand. Yeah, I've been with Made Comfy for 5 years now, mostly in revenue management.
Perfect. Thanks, Vincent. Nick, would you like to introduce yourself and your company?
Sure. So, yeah, my name's Nick. I work for a company called the Stay Hub. We're Auckland-based in New Zealand, and we manage around 200 properties. Bit of my background, I used to work for a company called Batch Care that is the largest property management company for short-term rentals in New Zealand. So I have around 6 years experience revenue managing in short-term rentals.
Awesome. Thank you, Nick. And Matthew?
Yes, Matthew Kebb, Group Revenue and Distribution Manager for Allogio. We manage close to, or maybe more than, at the moment, 2,500 individual listings across Australia and a bit in New Zealand. through about 20 different trading names and in and around different holiday regions. I've been looking after short-term rental revenue for about 3 months, having done about 15 years in hotel side. So I've come in with a set of fresh eyes into the industry and been learning quite a lot along the way about some of the particularities of this sector, but also some of the ways in which things actually do operate the same in accommodation, no matter what.
Awesome. Really excited to have this conversation with you guys. We're basically, so I'll give you a brief little overview. We're going to talk about 3 main things today. I'm in the United States, so I'll try not to get your seasonality mixed up, but I'm pretty sure you're in the middle of your low season, just coming out of high season. So we're going to talk a little bit about how high season went for these folks and what kind of things you guys were doing, implementing, thinking. We're going to talk about how you're maybe handling the low season right now. And then we're going to talk a little bit about what the expectations are for the next high season coming up, how you think the market's going to do, that sort of thing. One quick reminder, if you are not muted, please put yourself on mute and we'll be good to go. So let's start with that question about the past. Coming out of high season this year, post-COVID year now, how did the high season go for you guys? What are some of the challenges that you came across? How did you have to adjust your rates or adjust your revenue strategy different than maybe what you were expecting if you were thinking about this a whole nother year ago? Nick, do you want to give us a start?
Yeah, sure. So obviously I'm talking from a New Zealand perspective. So summer performed really well for us. ADRs were higher annually, and occupancy was about the same because the previous summer was pretty good as well. But what we saw in terms of the trend or the change in seasonality is that post-Easter demand effectively dropped off a cliff. And then into low season, we saw, which is May typically for Auckland, it was more pronounced and significantly down, and so the occupancy was in sort of the high 50s when we'd expect it to, in previous years, to be in the 70s. So it's been a really challenging period for us, but we are seeing a bit of a pickup, so slowly picking up in June and into July. But the big difference for us here in Auckland especially is that we had the FIFA World Cup here last year, Women's World Cup. Don't have the luxury of that event this year, so it's going to be a quieter July as well. But we are seeing being more optimistic for the future.
When you started noticing the post-Easter drop-off, how did you notice that in your data? How early did you notice it? And what did you do in response?
Yes, at the time, we still use Key Data Dashboard. So we use that regularly. We just saw a couple of really short, very low sales weeks at the end of April, which obviously was a clear indicator that May was going to be slow. So we'd expect May bookings to be higher at the end of April. I was just going to go into sort of the actions we took. So we fell into a little bit of a trap, to be honest, of chasing the occupancy by reducing our rates. And we took our rates down lower than we had ever done historically. And it did recover occupancy marginally, but the outcome was negative, really, because it didn't counter. So you dropped our ADR, it didn't counter the occupancy to the extent we wanted. So going into June, we went in with a bit more of a different strategy. Yet we are chasing volume and we are trying to be competitive, but we're not racing to the bottom in terms of price. We're trying to protect some of our properties sort of minimum price, and we've been obviously controlling that in Wheelhouse. So we went through the implementation of Wheelhouse with John in May, so that was in June. So we've been very closely looking at our minimum prices to make sure that we're not going too low, because at the end of the day, there's a point where your costs start to get very close to your actual income, and then you're not really got much of a margin. So we've been very careful in June, and we're seeing a much better ADR and so therefore RevPAR result in June, and we're pushing for a better further result in July.
Perfect. I'm going to put a pin in that conversation around how much the rate cutting is actually successful in affecting the occupancy. I think that'll be good as we talk about kind of what's going on now in the low season. Vincent, do you want to give us an idea about how your high season went?
Yeah, definitely. I think for us this year, the high season has gone exceptionally well. Actually, it's been the strongest we've had since pre-COVID. So we were really happy about that. I think for us, really, some of our key learnings probably since the end of the whole pandemic was really how we manage our booking windows. And that's, of course, using dynamic pricing in our case with Wheelhouse, but just making sure that you're not either underselling your properties too early, or on the opposite, keeping your inventory for the last minute too much as you get closer to low season. Now, as Nick was talking about, I think we probably all felt in the industry kind of a steep drop after Easter. And I'm not sure if that was as strong of an impact in New Zealand, but for example, for us in Australia, what happened for us is basically the Easter weekend that usually takes place during the month of April was happening in March this year. Alongside of that, different school holidays in different regions of Australia were not happening at the same time either. So while you would be thinking potentially that means the entire month would go well for us as a business, what actually happened is more that the demand was kind of split over a longer period. So there was, of course, a slower April since then. And of course, as we know, May is usually the first month of the low season here in Australia. So it's usually quite steep month. So I think really for us, the big learning is how do we manage our booking window so that we start securing the low season early on, let's say.
That makes sense. I'm also really curious, when you have like a school holiday and an event season, how do you look at your booking windows when those are inconsistent year over year? How do you think about when you should plan?
Well, yeah, I would say regarding, for example, school holidays, really for us, it's about a bit understanding what are the travel corridors as well, where our guests are going to travel from, because obviously a school holiday in New South Wales, well, it's not going to affect New South Wales travelers traveling in the same state. Most of the time, you'll be either welcoming international travelers or travelers from other states. So you need to really understand what are those periods that are going to be positively affected in that market, and not confuse that with the school holiday period of that market, let's say. In terms of really dealing with low seasons, but I guess understanding a little bit what the booking pace looks like on the rest of the industry. And I would say, I think there it's super important to look at what the market data looks like, how quickly does the occupancy pace, what are the rates, are we well positioned compared to our competition. I think that's really how we look at it. We want to make sure, especially if you see slow demand trends, as you get closer to low season, we want to make sure that we don't fall in the same trap that it looks like most of the industry is falling into.
That makes sense. Well, thank you for that. Matthew, I know you said you're pretty new to this organization, so maybe not around for the high season, but can you tell us a little bit about what you know about the high season, and also maybe what you've been exploring to learn how your portfolio works?
Yeah, definitely. Well, the week I started was the week right before the Easter weekend, and obviously the biggest thing was we were coming off such a good summer, and then now panic around Easter's not pacing the same way it should be because the school holidays are misaligned. All or almost all of our listings are in regional drive destinations up and down the east coast of Australia, and then a little bit of presence North Island, New Zealand, which we know drops off in the winter significantly, and that's true across all sectors in New Zealand. I came from looking after luxury lodges. One of the most famous luxury lodges in all of New Zealand still dropped off to barely 50% over winter, and if they can't attract guests, no one's attracting guests. So we know that these things happen, but what was interesting coming in looking at, the first thing I did was say, all right, what is that booking window analysis for Easter actually looking like? What's the curve? Is it different? Is it, shorter lead now because this is not on the books? And looked at it compared to last year. And actually the booking curve for a lot of our regions looked the same, just diminished for Easter. So what we immediately did was, okay, well, actually all this rate slashing that everybody did and put in place didn't really change the shape of the curve. We were just trying to recover stuff that wasn't there. So much echoing what Nick said and what Vincent said, we probably did a little bit more of a disservice to ourselves instead of holding and trusting the curve. So that's some of the things that we want to get implemented and we want to get more sophisticated at, is to try and say, right, things are trending, although down, and that's just the base level coming in there of the early bookings wasn't in place. What do we need to do for next year to make sure that doesn't happen? If we're going to do any kind of specials or promotions, let's run those earlier. Let's get those out. So that was probably the first big learning. And now it's about looking at how do we put that in place for the rest of this upcoming low season, and trying to get those in place. As everybody's been saying, it is tough out there this winter, and more so even than last winter. And a lot of the international demand that we had last year with that Women's World Cup firing around just isn't in place, and the flow on effects out to the regions is the same.
Awesome. I want to get into one nitty-gritty question before we move into some of this low season talk, but I know there's a lot of people here. Revenue managers throw around the term booking window a lot. I was just wondering if we could each go around and maybe talk about what specifically you calculate, how you do it. So, I'll give you an example. When I do booking window, I tend to look at my properties in the same region by bedroom count, and then I look for the median and the first 20% and the last 20%. Those are the heuristics I use. But just a little nitty gritty about, like, are you using averages, medians? How do you split up the portfolio to kind of like calculate that curve? Just so everyone here has an idea. And we could start with you, Matt.
Yep, sure. It's very similar sort of process, but it depends on really how much data you can access. The more, the better, obviously, but really what's relevant to you. So great way to book that up is by making some of those benchmark times of, how much to final were we? And that's what I like to look at is, all right, if I'm examining my pace to last year, if I say that that's what I've got to hit, adjusting for any budget figures I have as a variance to last year. So, okay, my budget is 10% up on last year, because they always go up, they don't come down. But they're so if it's 10% up on last year and I was 60% to my final result of last year at this point, then extrapolating it out, if I had the same kind of percentage pickup of what I'm holding now, where's that going to land me? And really seeing, okay, but am I 60% to final based on the last 4 weeks, 8 weeks, 12 weeks, or, how are those trending? So really kind of painting two curves for yourself to say, this is where it went. Am I following that same trajectory? If I am, then I know where I'm going to end up. If I'm on a different trajectory, where does that trajectory end up? And then, what are the things I can do to change that trajectory? Follows immediately on, but knowing where you're going to end up tells you where to correct your aim.
Perfect. And Nick, what about you?
Yeah, so all our properties are in one city, so the booking curve overall is sort of very similar across the whole city, and it's very much triggered by public holidays, school holidays, and events and things like that. So it does vary. So we obviously are very aware, and we track and just monitor against last year how those curves are changing. But one thing is a blessing and also sometimes a bit of a hard work. But with 200 properties, you're in that kind of place where you feel like, and we do this, look at every single property. We're not quite at the scale where you've got to group them together and say, okay, this group behaves this way and this group behaves that way. But to generalize as much as I can, we have quite a spread of portfolio or property types. We have apartments, 1 bedrooms, and we have 4 or 5 bedroom houses. And then some of them are in the suburbs and some are in city centre. So what we do look at is that the houses and the more luxury end of the scale tend to book earlier. So we hold the rates as long as we can, because we know that people are booking further in advance, right? We don't have to panic so much. The 1 bedroom CBD apartments, they're booking the day of the same day as they're going to stay. It can be very, very late. So again, you kind of have to hold your nerve on that one as well, because you know that the demand will come in, but it's just how late do you wait before you start significantly discounting. But so in Wheelhouse, we use the conservative, the recommended, and the aggressive curve in terms of the discounting, and we just set each property individually based on how we know that property performs. So some are on aggressive, some are on recommended, some are on the conservative, based on the location and the size of the property effectively.
Awesome, thank you. And Vincent, how are you guys looking at your booking window data? Oh, you're muted. Sorry.
Sorry about that. I think in a way quite similar to both what you and Matt were talking about. So of course for us, because of the volume of properties, we like to group and and categorize properties. So like by location, by size, by quality standards. I would say by segment. Let's put it that way. And on the other side as well, in terms of how do we pace the booking window, we try to look at historically what portion of the market's inventory is booked at a given point in time as you get closer to that date. To give a very plain example, it's imagine half of the market is booked or half of the entire bookings received last year were booked, say, 60 days in advance. Then we want to make sure that we understand, at what point do we want to capture the demand, basically. You don't want to, for example, if you're in a market with a high demand, you don't want to be the first one being booked because there's plenty of choice out there. Prices are still quite competitive, whereas once the inventory kind of reduces on the market, you have an opportunity to pump up your price because there's still a high demand in that market. And the stock is obviously a lot more reduced. So yeah, it's kind of a mix of understanding what is the booking the booking pace of that market, defining at which point in time do you want to start capturing the bookings, essentially. That's kind of how we deal with I would say our premium and discounting. So at what point do we want our price to start meeting what most guests are willing to pay?
Awesome. Well, thanks for indulging that exercise. I don't think anyone ever asks revenue managers what they mean by booking window, so you guys killed it. It's a tough question. So let's talk a little bit about what's going on now in the low season. This can just be some strategies that you guys are implementing on a macro level, how you think the market is doing year over year. Also curious to kind of touch on this idea of like how you're dealing with the rate cutting and also the rate holding. That's a great topic. So I'll let you kind of pick because we're all in the middle of this same seasonality together. And Vincent, why don't we start with you again?
Yeah, sorry. So yeah, in terms of rate cutting, you were saying, I would say, yeah, I think it's still quite connected to the booking window conversation. If you want to avoid having to cut too much, you need to really have understood your booking window at each given point in time. So I would say in low season, we know that rates, as by definition, rates are going to be lower than they are in the higher season or the shoulder season. But they're going to be even lower, of course, if you wait too much to the last minute, because then you start stressing out that your occupancy might be too low. So I would say, yeah, it's all about how do you pace your booking window for different seasons. So you might want to, start capturing your bookings earlier, securing your occupancy earlier, I would say, during that low season to avoid basically that rate cutting, I would say.
And as you're making these decisions for the low season, how are you generating like your either target or kind of expected occupancy to be able to make that decision in the low season? Because if it's not going to be sold out, you guys have to have a point where you're okay with that to guide your decision making, right?
Yeah, definitely. So well, we have a whole series of metrics we look at. Obviously, we look at previous years, even though it might not be perfect, especially in the post-pandemic market where things tend to change a lot year on year. But yeah, we try to look at first, what do the trends look like on the market last year? What did our trends look like last year as well? And I think that sends already a signal as to whether or not that year is going to look softer or stronger than the previous years. So that's, I guess, gives us a good kind of understanding of where we're sitting at. Yeah, I think a lot of what we do usually tends to relate to watching market data, making sure that on a day-to-day basis we understand what's happening, what are the big movements. Yeah, I would say that.
Perfect. Nick, how are you guys approaching the low season this year?
Yeah, so what what we're trying to do, I think I sort of touched on it a bit earlier, is just try not to panic too much about the rates. So trying to hold the rate as long as we can. One thing we did do recently, because we don't have we don't get very many direct bookings at the Stay Hub. We're very reliant on channels. So there's some promotional tools that we've used in the past on there. So we've played around with early bird rates to try and pull bookings forward. So use that as on Booking.com and Airbnb. We've used length of stay discounts, so trying, if somebody's looking for more than a week long booking or for a month, that the discount is automatically applied to try and just get them to make the conversion there and then. But just not really so much a revenue management thing, but one thing I was going to just highlight is that we actually started looking at our cancellation policies. So what we've tried to do recently is back to that booking window. We've tried to match the cancellation policy to the behavior of the guest. So we can go flexible to, say, a moderate policy on Airbnb confidently, because we know the majority of people book very late and therefore don't really get the benefit of the cancellation policy. They see it as being moderate and see flexibility and think, oh, that's a bonus. But like I say, on some properties, they're booking very late, so they don't actually really get the benefit, but the perception is there. For other properties where the length or the booking window is longer, we've been less flexible or sort of matched the cutoff points to when people are already booking. So that's quite a useful tool, I think, and we've seen some benefit in that. It's only marginal, but I think it's all about marginal gains when you're in a low season or a low sort of market.
100%. And how are you deciding what rate to hold at in the situation where you're not trying to, just panicking and dumping the rate?
Yes, I think what's key, because I'm all for as much automation as possible. So it's just what we've done is just try to work out the balance between the base rate and what the minimum rate is. So we roughly work on around 30% variance between those two. So if obviously the rate's $1,000, for example, we would put the minimum around the 700 mark and let the system move with the market. So it's really getting that delta between those two numbers right. So what we did in May was we actually dropped the minimums quite a bit further, sort of past 40%. Of course, we were using PriceLab. I won't mention them again at the time. But obviously, you just need to use. I believe you need the system to use its algorithm to work its way between that base and that minimum in line with the market, because it's making calculations that I can't possibly be making over 200 properties every day. So I think that's really critical, that mix between. I don't think you should be shy with your bases. You can be a bit more aggressive and let the system work its way down towards that minimum, and based on that kind of conservative or a more aggressive approach.
Awesome. And Matthew, how are you guys dealing with your low season right now?
Yeah, just on Oliver's point he's putting in the chat there, you don't need to be a Wheelhouse user to participate. We're not. We're actually not using an RM system right now. And let me tell you, that's hard mode for low season. So what we've kind of taken an approach of, we've looked at our markets, we've used the data that we do have available and be able to look into markets and say, right, this is soft for everyone. It's not something that we're doing to be worse off, where applicable. What that means is that, we could get into a sort of a price undercutting scrap for every, one booking out there, but it's going to do us a little bit more damage in the long term. And really, it's about kind of what the owners want as well. A lot of owners don't want you to fill their property unless they get a certain return from it. They'd rather just, have it out there, or maybe they can pop up for a weekend or something like that, not take bad opportunities. Make sure you're taking good opportunities. So what we're doing is we're taking a little bit of like a property investor approach to it and saying, okay, well, let's do some cleaning, let's do some maintenance. And that's from a distribution point of view, right? Of anybody who is looking, let's make sure we get seen. Have we refreshed images on our listings in a while? Especially if we see that we have units that don't have any bookings coming up in the next few months. Why is that? How's their review score? How are their images? How's their content? Give it a refresh. If we want to talk about putting rates down, dropping rates for anyone, well, let's do that as a promotional rate instead, get some tagging on it, put it on the channels instead of just taking rate down. These sorts of things to, make it a little bit more of a healthy distribution environment, and get it spruced up so that way when this low season sort of comes to a close, we hit the booking window for the high season, we're actually in an even better position to capture that and kind of make up for what we just went through. And also trying to keep people focused on what's ahead. We have to deal with a lot of owner environments where we're giving them statements every month. So they're looking back. By the time they get their statements, that month's over. There's nothing we can do about that month, but being able to try and point ahead and say, right, we've got this bit of a winter time when we know that's soft and everybody knows it's soft. They know it's soft, but, also equipping ourselves with the data of summer's looking good. We're seeing trending ahead over Christmas and New Year's in several of our markets to say, that's actually, we're looking better there. Here are the things that we're doing to, improve our visibility to be better seen when this time comes and get better returns from that. So yeah, taking this chance to be able to brush out the cobwebs a little bit.
I think that's awesome. That makes a ton of sense. Like, I feel like over the last few years post-COVID, at least in the United States, people kind of forgot that you had to do work on your distribution. And what we're finding now is there's, across the United States, there's a lot lower occupancies in most markets, right? And you just have this environment where if you haven't been keeping your distribution healthy, now you're really suffering. There's a lot of mix. Like, a portion of the markets are doing better because those people are capturing higher rates and the occupancies, but then a bunch of people are just losing occupancy. And taking the opportunity, especially in your low season, to clean that up and focus on that, I think is great advice. Do you guys, there's a few trends I know that are happening in the United States that I'm interested to know if that's kind of occurring where you guys are. Are you seeing lower occupancies overall? Are they trending lower? And is the ADR also attritioning, particularly in your like prime booking window in the low season?
Happy to kick back off. Yeah, I think definitely across border and sort of a region agnostic, just generally lower occupancy levels. We look at a span covering from Sunshine Coast in Queensland down through Great Ocean Road in Victoria, and I don't think there's any one of those specific areas that's trending better than last year for this winter. Same thing with New Plymouth, New Zealand. It's way down on normal even winter levels. So yeah, I haven't seen though necessarily a change in the rates, the average rates. But that said, that's from our just internal data, and the level of active rate management around our regions is not as dynamic as maybe it will be in the future. So yeah, with a new sort of revenue management system that will be coming in eventually.
Awesome. And sorry for the pause for me for a moment. Zoom asked if they were like, we think you switched languages. Are you in Dutch? I was like, no.
Yeah, that's my funny hybrid accent. Sorry.
He was asking me. I was confused. Nick, what about you? How do you think the market is doing right now in the low season?
Yeah, well, July is looking very similar to June. So I mean, if I look at the month now, we're about 7 points behind in occupancy compared to this time last year. So I don't see much pickup in July. But in terms of looking further ahead, if I look beyond August, we're actually ahead year on year in terms of occupancy by about 3 percentage points. So, and ADR is, I wouldn't say it's up, it's kind of holding annually. So I think, I know from my experience at Batch Care, and when we went through a very bumpy sort of post-lockdown period, when the market is down, you just see a more pronounced seasonality. So low seasons are lower, but then there's people kind of holding up for the summer, and there's more pent-up demand. there's actually an opportunity for the summer, I believe, that you to be more aggressive with your rent. And because I think people are going to hold their finances to the summer and just they go on holiday when they really see the benefit rather than taking those ad hoc breaks. You know, in a buoyant market, people might say things like, "Oh, we'll just go to Auckland because there's a concert on, and we'll just do it." They don't have the constraint of finances. They stop that behavior, but they will continue to want to go away for the summer. So, yeah, the big opportunity and something we're keeping a close eye on is just that future occupancy looking, it's already ahead, is maintaining that momentum and pushing the rate up as much as possible without, you know, slowing it down too much.
Yeah.
Just on to Nick's point there, and I did hear this morning there's a survey about what Australians are going to be doing with their tax returns, because it's end of the financial year this weekend, and a higher level than normal. I think it was like 25% were saying it goes straight onto household bills and expenditure and that. So really a lot of the disposable discretionary income in households is still being tightened, and where until we get some movement on interest rates and those sort of macro trends, that's going to be the case. We got a rate hold this month, but we'll see how that continues.
Yeah. Vincent, what about for your team? How's the low season? Or sorry, we already talked about how the low season's looking, but how do you think the markets are performing? I know, just in a general basis, are we up? Are we down?
Yeah, so I think what we've been seeing as well is beginning of low season indeed has been a bit softer than the previous years, I'd say. For us, what we're seeing in the rest of the low season, like July, August, kind of related to what Matt was talking about. We've been doing also a little bit of homework internally, see what can we improve on our listings, how does our channel distribution look healthy, etc. I think some of the trends we're also trying to keep an eye on internally is what does the supply look like on the market? And we've seen certain locations where we are based where the supply has increased quite significantly in the past year. And so I think as a business, what's kind of important to do is not necessarily to try and grow where you see supply coming, because that's probably how it's going to be the easiest. Obviously, if people are adding their properties on the short-term rental platform, very likely they're going to contact a property manager, right? So, but it's also about understanding what are those locations where the highest opportunity is as a property manager for us to grow. Now, looking at what we're expecting in terms of trend for the future, I think similar to what Nick was saying, and also related to all those homeworks we're trying to do in the low season, future months are looking quite healthier already from July onward. And we're obviously trying to put ourselves in the best situation possible for the high season. Now, I think some of the uncertainties maybe we might have are more around, I would say, potentially regulations that are being discussed across different states and different major markets. So that could also have some major impact should there be rolled out.
Yeah, I'm very curious. Are all of you guys looking at supply, and how is that different in the markets you're in? I know a lot of US markets have had massive supply increases, even to the point where occupancy is down, but aggregate demand is still up. It's just that supply is outpacing demand and has been for a couple of years, and that's really starting to catch up with folks over here. Just curious if you're all looking at that, what your thoughts are on some specific markets, that kind of thing. And you guys can jump in.
Can start with Auckland. So not exact numbers, but when I last checked, there's around 1,500 additional listings year on year in Auckland, just in the city. So I think what happened as a general trend in terms of the stock is that lots of properties that were switched from short-term rental to long-term rentals during the pandemic. They came out of the pandemic and then switched back to short-term rentals. So there's been a sort of a combination of a drop in demand, an increase in supply. It's like a perfect storm in that respect. And now we're seeing, because we've had a couple of wobbly months, you're starting to see those owners like, oh, well, maybe I should go back to long-term. So what we're trying to do is just say this is not, we don't believe this is going to be a long-term trend, that it's just a few bad months. And just on that, just to circle back to something that Matthew was touching on, is being good with data and supplying owners with some data to reassure them that the future's looking brighter, that April, May, June were unusually slow, and that there's confidence that it will pick up again. Because for us, especially in a city location, a lot of the properties that the owners are investors. They've gone in buoyantly after the pandemic with money to swashing around. Oh, why not do with my money? I'll buy some investment properties. Look at the interest rates, aren't they low? Roll on a couple of years, interest rates are high. These people have over leveraged, and then income's dropping, so they're in a really tight spot. So it's just trying to reassure them that they need just to hold their nerve as much as possible, and that we are seeing a positive summer coming.
And for that data you're sharing with them, where do you get it? What specific data points do you usually share? That kind of thing. Just a few examples of kind of what you're sharing with these folks.
Yeah, so we have been using Price Labs data, so up till very recently, and you can see a really cool, really good sort of combination of, and you can see that now in Wheelhouse. So it's the difference between your current occupancy for the future and how that compares to last year. So you can typically see like a delta between those two numbers. So we're kind of trying to forward forecast that, but it's very difficult because so many properties perform very differently. You know, at the higher end of the portfolio, there's still plenty of money out there, and people are still booking 3-4 bedroom houses with swimming pools and tennis courts, and their occupancy is not sort of being compromised at all. It's and the same with the CBD. There's always demand for the city centre. It's kind of the city fringe, sort of that kind of mid-range property, 3-bedroom houses. That's where we're struggling the most with occupancy, because it's not an apartment, it's not a luxury, it's kind of in the middle. And that's been the most challenging part. And it's those owners we're having to sort of just say, no, we give them a very broad sense of what we see in the future in terms of future occupancy, that we are currently ahead. That is, and we believe that the seasonality, like I said before, is more pronounced. So low season was really bad, but we believe that summer's going to have this pent-up demand, and things will be much more positive.
That makes sense. That's a good bet. Matthew, did you want to comment on any of we've kind of talked about a number of things, supply, market data for owners, that sort of thing?
Yeah, the similar sort of things. You know, you get the market data where you can. We've been using key data and maybe some other industry sources to try and get as much a handle on that. Oliver dropped some stats in the chat. And Byron Bay only 3% up in supply, and the regulatory chats are really what's holding a lot of people back from that area. They're probably the most famous example in Australia of people being scared of what a council is going to tell them they can do with their investment property. Capping at 60 nights, and I think that comes into effect as of September. So yeah, there's a lot of trepidation, a lot of almost fear about, well, do I need to get somebody into a long-term rental for my property just so that way I can have something coming in? How is the cap going to affect me? And you're trying to quell others to say, well, look, there's things we can still do with it, and to the broader point of trying to keep everyone informed that these dips in the market are temporary. This isn't your new normal. This isn't your life now is getting this much a month. This is a little bit of a break. This is what being an accommodation operator is that sometimes it dips down. Remember the highs. It comes back to that. And really, the other thing is trying to understand kind of what the drivers are for their properties as well. So mentioning the CBD fringe and the 3-bedroom places, we have an office that does a lot of those around Melbourne. And one of their key markets is actually not leisure, it's business relocations, project work for corporate guests, people coming down, and insurance relocations and that sort of thing. And that's dropped off significantly, because as much as we say, individuals and households are feeling the pinch, businesses are absolutely feeling the pinch. So what may have been driving in some of your areas of these people coming in on 2-3 month projects and boosting up occupancy by fully consistently occupied units is now no longer there, and we're chasing shorter stays, holiday makers in units that typically don't get them. So a lot of that stuff is kind of dropped out too, and that makes a big difference when you're looking at just a macro picture of occupancy. So being able to explain some of those factors to a holiday, and it's like, actually that's a segment of the market that's missing. So when you see the market down, that's who's missing a lot there. You get a holiday business, you're in a good position, you're okay.
Awesome. Well, we've got about 12 minutes left, so let's touch a little bit on the future. What do you guys got planned for how you're gonna, manage your rate strategy through the upcoming shoulder and high season? You guys have any novel ideas that you're implementing, or any concerns? I think it's an opportunity to just kind of talk about what you think is going to happen and what you're going to do. Vincent, do you want to start us off?
Yep, definitely. I think, well, for us, something we continuously try to do is, of course, try and adapt our strategies more and more to specific groups of properties, as we discussed before, to try and understand really the guest target, what are the booking behavior, etc. So that's kind of a general level. I think in terms of things we might spend more energy into, it's really, different booking platforms that we advertise on have different algorithms. They have different ways of promoting certain properties over others. And I think where we also want to be able to play a little bit is kind of understanding what sort of options they have, what are potential rate plans, things like this that we can work with, so that we can make the most of each one of those booking channels' strength and customer targets and things like that, I would say.
Perfect. Sounds like a good kind of low season project. Distribution projects, like we said earlier, are always in-depth, complicated, and take time to implement. Nick, how is your team? What are you guys doing in preparation for your upcoming next high season?
So sort of touched on it a little bit before, but what we do is we keep playing around with our far future settings. So as if you haven't guessed already, we use Wheelhouse. So in Wheelhouse, there is a function called far future. And although the system is doing a great job of picking out peaks and troughs for the summer and has pushed rate up significantly, we're pushing it a bit further. So some properties are on 20%, some on 30, some on 40. We're just trying to push that far future increment on top of the system's rates. If sometimes we go a bit far and then we just have to sort of tweak it down again. I'd like to say it's really scientific. It's not necessarily. It's really, you're taking a bit of a punt, right? I mean, part of revenue management is data, but part of it is gut, right? And you're not, you're taking a bit of a punt on the future. So we're just trying to hold the rate as high as we're comfortable. And with that far future setting, you can set the parameter of how many days in the future you're looking at. So we've got ours running on a 90-day view. So if you're any customer is trying to book 90 days in advance, they're going to be unknowingly paying a premium on top of what the Wheelhouse pricing is. And that just rolls forward every day. So the other option as well as the percentage is obviously just either lengthening or shortening that window, that booking window, at the point where it kicks in. We find that really useful because at the end of the day, for Auckland, generally speaking, if people are booking 3 months in advance, it's for a very good reason. It's a wedding, it's an event, concert, sports, whatever. They're less price sensitive. Yeah, you're being cheeky with the rate, but they are going to book because they need to be there. So we are very aware of that, and we try to push those prices as far as we can.
Awesome. And Matthew, what about your team? What are the big considerations for next year's high season?
Yeah, look, making sure that once again, as part of this sort of distribution housekeeping spring cleaning process, that everybody's got the right conditions in place. We have every listing in key areas has their minimum stays correctly, and we've been looking at cancellation policies, as Nick said earlier, as well, making sure that those are aligned. And we're going to have a revenue management software, and so we know that the rates will get there, but let's get them at least a basis that we're protected and make sure that those are set up right. And then also trying to identify like, all right, well, we know high season, but are there gaps in there that are emerging? You know, the couple of weeks before Christmas tend to be, they go a little bit unnoticed. You hit, you know, a pretty good peak, you go there, and then it goes up again. We know those things come around. So get the basics right is something that everybody can do, no matter what level of portfolio and technology and that you have. You know certain things about your market, you're in it, you're doing it. So do you have yourself covered for when you know the bookings are going to come? If you know they're going to come in, you know it fills up, you can be more aggressive with the minimum stay that you're requiring, with the rate that you want to put out there, with the guarantees that you make people pay deposits for. And that stuff is there. Just make sure that you have it in place and that you set, and then you can start, you know, refining around the edges and come back to it every week. Is it still pacing the way we are? Did we go too hard? You know, you've got to keep looking and checking and making sure that it is still at the pace it needs to be.
That makes sense. You did bring up something that does kind of pique my interest. We've noticed this year across the big, you know, kind of beach markets in the South in the United States, that a lot of these markets that previously held pretty strong restrictions on minimum length of stay or when people could check in and check out, those markets are starting to abandon those in the face of occupancy pressure. Are you seeing any of that, or any of your are you changing any of the way you treat minimum length of stay in your portfolios?
Wouldn't say at this point yet, but one of the things we are doing and our, you know, system allows us to do is potentially opening up lower lengths of stay, but for the same overall stay price. You know, if somebody really wants to go, they can only do 3 days and we want 5. If they're willing to pay for what a 5-night stay would cost for the 3 nights, let them. And then, you know, you have the potential to even double dip. It's if you can, if your platforms allow for that, if you can do that length of stay sort of pricing, absolutely do it. One, you get more visible, you show up in more searches because you're not just saying no to lower lengths of stays. And two, you can actually potentially really maximize what you're doing. So if you can do that, if you have the capability to do that, absolutely do that.
Awesome. Nick, what about you? Are you guys doing anything with length of stay?
Yeah, so there's being in Auckland, there's not the same restrictions. So I know in other parts of New Zealand, there's especially places like Christchurch, there's been some quite heavy restrictions placed on short-term rentals, and same in some parts of Queenstown. But we just have a general setup across all our portfolio where the minimum stay ticks down. So we hold for 4 nights out, you know, again, 90 days in advance, and then past that point, it ticks down to 3, and then it gets really low to 2. And we have those all set up in Wheelhouse. But one thing I would like to look at in more detail is looking at the summer and start to use some of the time frame settings. So outside of that rolling window, start to look at, you know, for New Zealand, everybody goes nuts at Christmas and New Year, right? It's the beginning of it's the biggest part of the summer. Straight school holidays are started. You'll be stuck in a traffic jam for a good 3 hours on the 27th of December. It's a guarantee, because that's when everybody decides to leave Auckland. Yeah, so it's just starting to look at those windows, so those public holidays or those school holidays, and saying, actually, historically, we got a 5-night booking for that property during that period. Let's not undersell it. Let's try and get the 5-night now by restricting it and holding out until as late as we can. So those are all parameters that we can define in our tools, and it's something I actually need to think about more carefully for the summer, to be honest.
Awesome.
And forgive me for jumping in here, but we're just going to have a few exiting remarks. John, unless there's anything else.
Can we let Vincent just tell us if he's changing anything on his minimum length of stay?
Sure. Yeah.
Yeah, sure. For us, length of stay wise, I'll try to keep it short. I think quite similar. We try and capture longer length of stays earlier on, and become more flexible with that as we get closer. Also, like Matt said, there are some opportunities sometimes where you want to be able to be visible for shorter length of stay, just for visibility perspective. But also, let's say for specific major events, to use an example, I think everyone across the world has heard of the Taylor Swift tour. Has had, I think, massive impact on the entire industry. You want to make sure that if someone is traveling to a specific city just to see that concert, you want to make sure that you can make the most out of their booking, basically. I think also important to keep an eye on your length of stay when you're talking about restrictions as well, because you want to make sure to make the most out of your high season and not fill up your entire cap during the lower season, because then it's of course not ideal for your property owner.
Awesome. Thank you.
Perfect. And as is typical of a revenue manager's roundtable, we ran out of time for a Q&A. So I'm glad those who could ask questions in the chat. And thank you for your joining today. Wheelhouse is joining the markets in Australia. We'll be launching a partnership with Home Hero in the coming months. But we do have a data platform I'd be happy to walk you through, where you can really create clear competitive benchmarking sets in your market and start to understand and unpack data. So whatever level you are at, we sort of offer tools for larger portfolios or people who want to become much more keen in their revenue management. I'm going to drop my email in the chat, and we're going to send the recording out as a follow-up, where we'll just put an invitation if you would like to connect. One more note, one thing that was missing from this roundtable were women. We are always interested in having a diverse and representative group of panelists. And so as we host these quarterly with you in the future, we would like to know and work with more women revenue managers, especially knowing that we are technology agnostic. You do not have to use Wheelhouse to participate on this panel. So thank you so much. I'm going to drop my email in the chat, and I'll let Mitchell wrap it up.
Thanks, Oliver. And thanks, John, Nick, Vincent, and Matt. I think we can all agree that that was a great session around what you can do in your business, what things and trends that you can be looking out for, and how technology can help you make life a little bit easier. I just want to thank Wheelhouse. Thank you for believing in ASTRA and us, and thank you for joining the family. And sorry, Nick, I forgot to mention you at the start, but the Stay Hub have joined up with ASTRA as well. So thank you for being new members to our organisation. End of the day, we are a member-based organisation. We are only here to serve and be there for our members. In October last year, we had 147 members. Today, we have 1,560 members. And by the end of August, we'll be on track well over 2,500 members, which is a huge success to everybody on this call, your owners, and your commitment to what we are doing. Thank you, everyone. Time away from us is time away from your business. So I appreciate joining us this morning. Our next webinar on the for ASTRA is next week. It's the 3rd of July. Guest communication, the two-way street to more revenue, repeats and reviews with our friends at TouchStay. So they will be joining us next week, this time next week at the ASTRA webinar series. Again, thank you for joining the webinar this morning. If you ever want to get in touch to learn more about what ASTRA is doing, you can head to our website. You can find my email probably in your inbox. I send a few of them to you these days. mitchell@astra.asn.au. And have a great day, everyone. Thanks for joining.
Thank you to the panelists. Thank you, John. Thank you, Mitchell.
Thank you, everyone.
Bye.